Do you often get stuck and not able to decide if you want to buy or sell while trading? Then after watching this video, you will have a very clear understanding of whether market will go up or down. Hello guys, my name is Priyanshu Songara and I am a full-time forex trader from India. Let's get started. I have divided this video into two parts. First one is theoretical and the latter part is practical chart examples. So make sure you pay attention to both for clear understanding. The way by which you will know where price is heading is by a concept called market structure. It is the core concept of trading style called smart money concept trading. So the basics of market structure. Now you may ask me, what is a market structure? Market moves from one point to another. This creates highs and lows, and these highs or lows forms a recurring pattern. It is called market structure. Simply, it is the path of price movement. For example, over here, if this is a price movement A, B, C, D, the price is at A point, it moves to B point, again it moves to C point, again it moves to D points, and so on. So when price moves from one price point to another, it creates a recurring pattern, a structure, and which consists of highs and lows, and it is called market structure. Now another concept is structure break, which is also known as break of this structure. When a price moves and breaks a high or low, it is called structure break. It can be with body close or wick sweep close. So there are two cases. The first case can be structure break with a good body close above this level of the high, or it may also be wick close below this level, which is called sweep, wick sweep structure break. There are two ways to mark structure: a swing structure and the objective structure. The swing structure is important. A swing structure has spacing on both sides of the structure, and we mostly use this type of structure. So when this is a structure, S here denotes spacing, so there should be clear spacing on both sides of the structure. Then it is a valid. If there is only spacing on one side, that is invalid structure and we will not trade that. Now coming on to the objective structure, each candle color is used to mark structure. We don't use this method to match structure. In this structure mapping, it's a mechanical structure mapping in which we just use bullish candle for up move, bearish candle for down move, and bullish candle to up move. So this will be a structure break. But we don't use these type of structures. The only structure that we will be focusing is valid swing structure with spacing. Moving on to the next topic, we have three types of market. Now this is very important because this chart, this diagram will help us to identify in which market phase we are and where we will head next. Whether we will go up to continue uptrend or downtrend, or if it's a sideways consolidation market. In the uptrend, series of higher highs and higher lows are formed, so structure break is in the upside direction. Here the price moves upside with structure breaks. This is higher high, this is higher low, higher high, higher low. Okay, and similar for this case, which is a downtrend. In the downtrend, price breaks this structure and moves down, creating lower highs and lower lows, lower highs and lower lows. Okay, and the third one is a consolidation ranging market. In this market, we wait for the price to become a trending market. Okay, since there is no price ranges between two levels without any clear structure breaks. So when it's a ranging market, we are out from the market. Okay, what is the pro tip? The pro tip to trade inside this sideways market is use the lower time frame. We will get a trend there. For example, if we are in a 1 hour high time frame which is sideways, then what we will do is we will step into lower time frame, 15-minute or 5-minute, and in that time frame we will clearly see that price may be in a uptrend or downtrend. Any of this trend, price will be present there. The important point to note over here is in the uptrend market we look for buys. Okay, we look for buys, and in the downtrend market We look for sells as the price will continue lower and break more structures. Okay, so this is the thumb rule, and these are the three types of market. So how we predict the market? We predict market direction through trend. Price continue its trend until reversal happens after a higher time frame liquidity taken or a supply demand zone is reached. We will always buy in uptrend and sell in the downtrend because that's what market will do with high probability. Okay, so we are not going to buy in this downtrend and we are not going to sell in this uptrend. We'll look for with trend continuation trade. Okay, and the time frame that we will use are daily and 1 hour. 1 hour is the main time frame if we are trading intraday. Now the another thing is there are three phases of the market. In a swing structure there are three phases. For example, price is moving over here, this is a structure break, so price retraces. So this retracement is the first phase, and the retracement continuation is the second phase till this structure break high. Okay, and the third phase is once the structure has been broken, then the price moves upside. This is the third phase. So we have these three phases of the market. In the previous part, we understood theoretically every concept required to forecast market direction. If you get any doubts, comment below this video and I will be answering to you. Now let's apply everything that we have learned on the live charts. First thing that we will look for is spacing. Is there a good spacing over here? Okay, so there is a spacing here and there is a spacing both sides of the structure, and this structure has closed below this level with the body close, so this is a structure break, body close. Okay, now next structure has spacing over here and over here, so on both sides of this structure as well the spacing is present, so we can mark the structure break over here. This is also with the body close. Now moving over here, this has spacing over here, yes, but on the opposite side over here we do not have any spacing. There is no spacing over here, so if only one side has spacing we will avoid that structure as a swing structure. This is not a swing structure now, okay, but this is just an objective structure. Okay, a bearish candle, bullish candle, and then bullish candle, bearish candle, and we do not mark these structure. Maybe in lower time frame it is a valid structure, but for the 1 hour it is not a valid swing spacing structure. Now moving to here, we have spacing here and we have spacing over here, both side spacing. We got a structure break, but what did the price did? Price actually failed to continue downside and move up. This here over here has spacing in the here but not here. Okay, one side it has spacing and other side it do not have spacing, so we'll use this as one structure, and after this structure is taken price now move to this. So this is also a valid structure because we have spacing here, we have spacing here. Again, once the price broke down it should continue downside, but what price did is reversed. Price reversed from here. This is a sweep because price do not close above this level. This is a sweep market structure and price retraces and move up. Okay, I hope you understood what is a valid structure and what is not. So this is again a structure break because it has spacing here, it has spacing here. Okay, now moving on to the next. This is another structure break because it has spacing here and it has spacing over here. Okay, this is also an internal structure break. Internal structure break. Okay, now is this a structure break? The answer is yes, because it has a spacing over here and spacing above here plus what should we are looking is spacing plus pointed swing points. Pointed means it's very clear swing points. Okay, the wicks are very clear. The movement of this spike is clear. This, like this. It's a structure break, and this low is also a sweet structure break. Okay, you may be wondering that price is respecting this, should respect this low because we are in uptrend, but it manipulated this low, it pick out this low and moved up because there's a game of manipulation over here and over here. And since this video is just about marking the proper market structure, we are not going to dive into the topics of liquidity. In the upcoming videos, I'll be teaching you about the liquidity. So now let's continue the structure break. This is a structure break because we have spacing here, clear spacing and pointed structure, clear structure. Again, this is a structure break. Okay, and so on. Now, the core question is how we will determine whether to sell or buy. So in the uptrending market, just like here, we will look for the buys. For example, this broke a structure over here, so we will look for a buy here. Okay, we'll look for the buy here in the retracement. Structure break again, we'll look for the buys in the retracement. Okay, another thing, a structure break over here, so we will look for a buy over here. Now, in this area, the low is manipulated. This is the reality of how the market works. Usually, people see this as a market structure, as an expected market structure, higher highs and higher lows. But the real market structure is with the manipulation, okay, with the liquidity being generated. So that was the reason, and I'll not go deep into this. Okay. Now, another thing, a structure break. What we will do, we'll look for the buy. So we have a clear market direction. We'll look for the buy. We will not look for sells. A structure break, body close, a buy. Okay, and so on. And for the sell scenario, if we have a structure break, which is here, we'll look for sells in the retracement. Simple. We'll look for sells in the retracement. You will take trades with the trend and avoid against the trade. Okay, so for example, over here, we are not looking to get buys. We are not looking to get buys. And in the scenarios of uptrend, we are not looking for sells. If you want to have the PDF that I showed you, comment I am Yodha and I will send you this PDF for free. I hope you guys understood how to do market structure mapping in a proper systematic way. If this video helped you in your trading, make sure you like and share this video with your friends. Also, I want to let you know that this is the very first video of my YouTube channel, and this video on market structure is just basic starting concept. There are much more advanced concept of market that I'll be covering in the upcoming videos. If you want to make money through trading by learning how the forex market truly works, you can subscribe to our channel. Thank you so much guys for watching this video. See you in the next video. Till then, take care.